Welcome back to Pioneers. I'm your host, Ankur Patel, and today we have a very special guest on the line, Cory Janssen, who's the co-founder and co-CEO of AltaML. Welcome to the show.
Thanks for having me, man.
Yeah, absolutely. So right off the bat, one of the things we love to do is just understand your background, your origin story. How did you get to where you are with AltaML?
Uh, by complete accident, to be honest, and to be, I've actually never created a business that was completely planned out. It's always been sort of getting in the flow and seeing these opportunities. But in a past life, I co-founded a financial website called Investopedia. Started that while in university, bootstrapped that, and then sold it to Forbes in the late 2000s. So was to be honest, I was happily just not gonna start another business and just gonna manage capital and kind of it's almost like check did that whole entrepreneurial thing, right? And so I'm just gonna be an angel investor, just sort of like place a few bets, and I essentially was just trying to cookie cutter my old business model, and so launched a bunch of these other websites, and um, that was significant though, because in doing that, that got us to the point where I was spending so much on freelancers for content creation that around 2015 uh, had a cost problem, right, with how much I was spending in that area. And so approached some profs at the local university saying I wanted to do a project around algorithmic content generation. So keep in mind here, 2015. So Transformers, and not to geek out too much here, but the tech that makes large language models possible wasn't even invented yet. Most people hadn't even heard the term Gen AI. It really hadn't been coined, right? So we were many years early, way, way, way off on budget. But what I discovered is that right here in my backyard, I'm talking to you from Edmonton, Canada, actually a bunch of the academics that have, that are really some of the godfathers of AI were Canadian, right? And so we had this massive advantage from a talent perspective. And so kind of said, hey, maybe we should get into the AI space. And it's a longer story there, but again, accident.
Amazing, amazing. And some of those accidental stories put you at the right position at the right time, which seems to be the case today. So, what is the mission and vision that you have for the studio going forward?
So our purpose is to apply AI to elevate human potential. And there's a few things in there. So when I say apply, it's kind of definitely a play on applied AI versus deep research. So there's a lot of building blocks of a bunch of the work that's come out of academia that, we're just a blue collar AI company. We want to take a bunch of what's there and apply that to business problems. The human potential, there's a few aspects of that. Like we really want to stay away from military projects as number one, and make sure that the project doing actually benefit humanity. But I think there's also a tie in there to building tools. We believe that far from destructing or destroying the world, that AI is actually going to be the savior. We think that the tools that are built are going to help, especially professionals. We are more kind of enterprise B2B, but we believe that there's what we're doing is the next generation of software is really in service of helping professionals make better decisions. And so what I'm most interested in, I'm sure we'll kind of get into, is around health and clean tech, but really applying AI to elevate human potential is what drives us.
Yeah, and I think that makes a lot of sense. I think one of the great good that AI can do is make us superhuman at acquiring new information, using that new information to really, improve human productivity, creativity, even. And it's interesting because Investopedia, it has done such great good. It's been a tool for educating the masses on everything related to finance and investments. I'm curious how much of that experience shapes what your mission is with AI today.
Yeah, to be honest, it's a good question. I think that when we first started out, frankly, we weren't thinking about purpose. We weren't thinking about any of these other things. So I was 19 when I started Investopedia, right, with my partner. His name was Cory Wagner, and like it was the .com bubble. We were just trying to build a .com, right? And so I think it was a less, we thought less about culture and how to build a scalable organization. And because frankly, we had no idea what we were doing.
Hmm.
And he just kind of jumped in, right? And remember, like there's a different world back then, like the early 2000s. It wasn't like there was great business podcasts out there to learn from, wasn't there? It's like there's other entrepreneurs around, but like the world has changed in a massive way in terms of a bunch of this thinking. So my partner in my current business, I'm also married to, right? Her name is Nicole, and I think we've been much more intentional about culture from the get go. I think taking a lot of inspiration from some of the writings from Netflix that have come out of that. I mean, the culture book and everything that they've done there is pretty widely well known, right? But then No Rules and a bunch of the writings that have come from Netflix make you think about like, how do I build it? And this time it's like, how do we build like $1 billion organization? How do we build something that really scales? I'm really good at doing that first bit, but I suck at going beyond like say 50 employees, whatever. I haven't, we're only about 100 employees right now. Like I haven't built like 1,000 employee organization or gone to that scale, right? So like, unless you actually build some truly unique culture, I don't think you ever create something massive, right? And so it's a little bit different this time around. Like we're not just going to sell too early. This is hopefully the last company I ever start, to be honest.
Yeah, and I think culture is super critical because it's the DNA, the fabric that holds the entire organization together, especially as you get beyond 10, 15, 20, 30 people, where it's the mission at large, the company culture, that people can put their hat on, right? It's the
Yeah.
thing that kind of motivates them, keeps them together, especially if you have a remote first company with remote talent, it's even harder to do so. So I'm curious, as you're building this company, and you're trying to build a $1 billion business, something that has 1,000 employees, let's say. What are some of the big things that you've seen in terms of technical breakthroughs or innovations that you're really adopting at an organizational level to help spark that commercial applied business value to get to that $1 billion valuation, let's say?
Mm. Yeah, it's interesting. I actually don't think it's a technical breakthrough that's going to be our edge. Rather, the opportunity that we see is bridging the gap between academia and enterprise.
Mhm.
And so it's not so much one piece of tech or one thing that's within. Because again, like I said, we don't think we can beat Google DeepMind. So Google DeepMind would be like one of the preeminent AI companies in the world that's doing like, Google is literally throwing billions of dollars a year into fundamental research, essentially trying to solve AGI, right?
Right.
We don't think our odds are very good in that market. But at the same time, you've got this rift between these brilliant academics who they're some of the smartest people in the world, maybe not so much street sense. Right? And then you got the executives that, like, if you can find an executive that has they've made it to this point in their career often by like mitigating risks.
Hmm.
So finding someone to kind of lean in and bridge that gap, that's where we're seeing potential. So it's less about one technology and it's more about trying to be a translator between different worlds.
That makes sense. I think that makes a whole lot of sense. Like, if DeepMind, great research lab, coming up with trying to solve AGI is one problem. But let's kind of dig into some of the layers beyond that. So you have DeepMind on one end, and today, if you look at the landscape, you have hyperscalers like AWS, GCP, Azure that are trying to adopt, introduce new products and services to their clientele all around Gen AI. That's a big buzzword, of course. You have the big foundation model companies like Anthropic, OpenAI, Imbue, right? They're just Cohere. There are many of those companies. Where's the gap there in terms of what they're doing and the connection to ultimate commercial or business value?
So most of the capital, the vast majority of the capital has gone into both Gen AI, so these foundational model companies, and the infrastructure layers. A stat that not a lot of people know about is that over 80% of the flow in 2023 into AI was to 7 companies. Mm-hmm. So let's talk about Gen AI as one area, and then the hyperscalers a second, because there's some overlap there, clearly, of course, with Microsoft and OpenAI. But if we get to the hyperscalers and that initial platform, the kind of underlying compute and beyond, right? Like, they're obviously building, essentially the hyperscalers want to be the utilities of the next 20 or 30 years. And so the best workflows or workloads rather are AI. And so it
Mhm.
makes sense why GCP, Azure, and AWS have invested so much, and they've built amazing tools. I've wasted a lot of money, not huge amounts, but let's say between $500,000 and $1 million. Originally, we thought we were going to build out tools
Mhm.
because going back 5 or 6 years ago, it was like the Wild West. It was all those
Yeah.
open source tools and all this, and then all of a sudden you wake up one day, you're like, oh crap, Microsoft just threw 100 engineers working on this for 6 months, and now like my entire product is a feature, right?
Yeah. Mhm.
So we initially thought that our biggest competition would be the hyperscalers. They're our biggest partners now. We absolutely love the hyperscalers because we're building on top of their platforms,
Mhm.
and we could drill into this, but our go to market often revolves around building on those platforms, taking care of that foundational data place as you're building vertical on top of that.
Yeah.
So we really believe that vertical AI or our thesis is that we can create a large business around vertical AI and not competing, but rather partnering with the hyperscalers. I would argue that the foundational model companies are part of that infrastructure layer as well. So you've got the sort of horizontal compute, and then these guys. If I'm explaining to a lay person, I have to say like what we've done with these things is we've made a pretty good dent into solving language. Like we've
Mhm.
totally transformed how we can actually communicate with software. Like that's really, really exciting, right? But when you apply that to a business context, um, and this is where it might get controversial. I I don't see how the generalized like that like that you're going to have solutions that work in industry without having a deep understanding of the workflows and a unique edge on data. So what we're seeing is using LLMs combined with knowledge graphs rather than another source of truth, because otherwise, like it's not like you can just have 10% hallucinations if you're in legal or health
Mhm.
or finance. Like it doesn't work. Like it has to be correct. And and second, the LLM isn't the entire solution. It's part of that solution. There's a lot that's still rules based. There's a lot of the scaffolding that's all around it. So we're building applications where we can swap in and out LLMs, again, often sometimes working with our hyperscaler partners, but that doesn't mean you shouldn't go with some of the open source tools as well,
Yeah.
right? That is not a that is still a difficult problem to take that and apply in a situation where you have that source of truth, where you actually, um, have the benefit of what's been done by LLMs, with the rigor, security, privacy, and just overall accuracy that enterprise requires.
That makes sense. I think what you're saying is that the hyperscalers and even the foundation model players, they're more or less providing the infrastructure, the utilities for you to build on top of. But the value that really you see is going and understanding the different verticals, the pain points, the problems that they need to solve, and building the application layer that is much more vertical focused, as opposed to trying to compete in the infrastructure utilities layer,
Exactly.
which again these players that are $1 billion companies, sometimes $1 trillion companies, largely own.
Exactly. And it's not saying you can't make money in that space. It's just we've chosen not to place our bets there. Like
Yeah.
I think to build a new model, I think you need billions, right? I mean, for sure it's hundreds of millions, but I don't. And you know the foundational model companies can still succeed with. They will succeed more with thousands of new companies created that are building vertical models on top using that underlying tech, right? And so hey, I'm always on a watch out for, and who knows, if people say like,
Hmm.
well, just wait till 4.5 or GPT-5 comes out, and then all of a sudden it's going to know everything. I'm there's data sets that don't exist on the internet, and there's specific areas there. So like, unless you have, again, I come back to deep understanding of the workflow. Workflows matter,
Yeah.
and you and like it, even if it's not on the internet, like there's uh, unique edges on data that can be built from not just private data sets, but how users are working and utilizing that. I'll give
Hmm.
you one example. One of the companies we've funded is building an intelligent agent for agricultural equipment sales. Market I had know nothing about. Brilliant founder who's come in. Well, each of like, so think like these big OEMs, these big equipment vendors, they have these massive manuals, hundreds and hundreds of pages. They're like closely guarded, kind of
Yeah.
almost secrets, right? Because they're selling their products and they're working with it, right? So there's no large language model that understands the intricacies of the parts numbers that have to deal with these tractors, right? And so if we build a relationship and good old fashioned, like actually negotiating a contract and getting access to data and doing that, we think there's an initial edge that can be built there. And then as you have thousands of farmers actually using that data and how they're using it and building on that, no data moat is forever. You continue to have to work on it, but we think we can build a very big business on top of it. And that is, we are using, and experimenting with the big guys, the GPTs of the world, as well as the llamas, the open source, and all the rest of them, within this model. So there's an example of, I never thought I'd be building a business, building an agent to help farmers buy tractors, right? But it's actually a massive market, and you could not do this without LLMs. So far from there being less opportunity, it is the greatest time to be an entrepreneur. If you're working in the space and you understand how to use, it's like you've just been giving a brand new tool for your toolbox, right?
Yeah.
But beforehand you had like a screwdriver, and now you've got like a drill. Like it's a step change.
Yep. Yeah. It's the catalyst is new technology, which is now unlocking lots of value. And so there's huge benefit if you're a founder or an operator to go and take this new technology that's coming down the pipe and then helping it apply it to specific verticals or even specific companies, leveraging the data that they have internally, which obviously the foundation models didn't have access to, but which is absolutely essential for solving the actual workflows within that particular industry, or in some cases within that particular company, given how closely guarded all of this data is.
Exactly. And also the big players, they need massive markets here. Like, fine, I'll grab the crumbs and buy and get businesses that are, tens or hundreds of millions of dollars. Like that's still like success. Like I think sometimes obviously like and yes, it's about creating massive businesses and unicorn, blah, 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 whatever. Like, you know what? Like entrepreneurs are like, you can have a life-changing exit for 50 or $100 million, right? Mm-hmm. That is an absolute failure. For the VCs listening, that's heresy for me to say that, right?
Sure.
Like, for the entrepreneurs listening to this going like, hey, imagine if you get together and had a 5 to 10 person company that would have beforehand been a 20 to 30 person company that's throwing off a ton of cash, right? Like not every business needs to be a unicorn exit, right? And so frankly, we think we can actually create a massive business by, if we had tens or hundreds of these, like, mission critical problems and niche applications, like there's a big business there, right? Bringing those all together. But it's a lot of VCs, like, again, I think venture overall is playing AI wrong because all the money going into the horizontal, there will be winners there, but how are you going to pick that horse, man? Like, so Satya Nadella, I think, proved that he's a genius from this deal. So for those who don't know, CEO of Microsoft, right? Proved that he is an absolute genius through this OpenAI deal. So, a lot of people don't realize, and I don't know for a fact, so I just want to probably say there's legal on here or whatever, but the rumors are that there's a significant portion of that $10 billion that went into OpenAI that's basically for compute or basically coming back to Azure. Okay, so is this not the greatest vendor financing deal in history? Satya Nadella caught up to 5 years of investment from Google or whatever, right? Eventually leapfrogged. He's got access to all the model weights, it's been reported, right? So he has all the IP, has all of this, and then just created the biggest potential, customer for Azure. Genius, right? But those valuations, he's got different strategy in mind. And so there have been even some articles coming out about the VCs going, whoa, these valuations are getting out of control. Well, the hyperscalers have different motivations. It's not, he's already got a return even before that, right? So anyway, you see all this money going to the horizontal. I'm just trying to convince some to give us guys in vertical, just throw us a bone here, man, right? I'm hoping that there's more, and any VCs that are interested in that, there's a whole bunch of entrepreneurs creating companies in the space that I think, can have very interesting economics versus the horizontal.
Yeah, the horizontal plays are really interesting in the sense that if you bet on one and it hits big, it might hit massively, right? I think the challenge there is a lot of them are very, very rich in terms of valuations. Some justifiably, maybe some that are just benefiting from the tailwind essentially from this space at large. But yeah, I'm curious, at this juncture, if you look at all of foundation model companies, and it's hard to kind of weigh in on this, but I imagine that not all of the foundation model companies win, right? Because for them, they need to find incredible distribution, and their tech needs to be so much better than, in some capacity or another, than their peer set for them to go and win that distribution race. Otherwise, you spent $1 billion, let's say, building a series of foundation models that aren't getting the distribution necessary to get anywhere close to justifying the valuation that they have.
Yeah. I think Cohere is the most differentiated. And again, I have no connection to Cohere. I just admire from the outside. I will admit to a little bit of being a homer here because they are Canadian, and so it's the Canadian horse in the race, right? And their backers, Radical Ventures and Inovia, are amazing investors. But I think the way they've actually gone in more from the business side, I actually think is the better strategy. But you kind of alluded to it beforehand. I mean, there's only so many big tech companies that have the deep pockets to be able to. I mean, Google, Microsoft, and Amazon have all made their bets. I mean, I guess Google's making multiple bets with Mistral and all this, right? But like, or sorry, Microsoft rather. But Cohere does have, I believe, Salesforce and Oracle kind of came in. Like, obviously the big Chinese companies have their bets, and there's some outside in Israel, but like, there's only so many organizations with deep pockets like that, right? Like, I just don't know how you. And plus, to start these companies, you need to be like an ex DeepMind employee to go off and do that anyway. So yeah. Anyway, there's a lot of hype over this.
Yeah.
The bottom line, or at least my opinion on this, is that AI is not just the horizontal foundational model companies. They're important. There's going to be massive winners there for sure, but horizontal does not necessarily equal AGI.
Yeah.
Right. And, I don't want to compete in that space, and I don't want to compete with the Databricks and the Snowflakes or the hyperscalers and building tools, right? There will be money made there, but just understand the risks you're taking, right? So it's neither good nor bad. It's just, understand those risks, right? Like, I don't want to wake up one day and learn that there's been all these engineers that, made the last 2 years of my life obsolete, right?
Sure. Yep. That makes sense. I think as you look at verticalized application, like vertical focused applications built on top of the horizontal layers built by the hyperscalers and the foundation model companies, what's the core argument that you see from building in this space of going to a vendor to introduce some of this technology versus some of the bigger players that are thinking of why not just use a tooling from an OpenAI or from an Azure or AWS or GCP to just go build internally for whatever their needs may be. So what's the argument versus like buying from a vendor or partnering with a vendor versus just building from the ground up internally?
Well, and this is interesting. I think this is also one area that AI is not SaaS. I think you need service components of it. And listen, I think a little bit of this is BS, right? Like, there's all these. Let's take Salesforce, right? Like, the inventor, the first company to really popularize cloud software, right? Who's there? How many organizations can use Salesforce out of the box? They've got like a whole network of army of consultants customizing this stuff, right?
Yeah. Mm-hmm.
We use NetSuite for our business, right? And it's really interesting in the licensing fee. And then you look down and like, oh, and it's like, this amount of setup, which is a massive number. Oh, well, we'll give you a break on that. Just add it to your license at the end, right? And you're front loading it, right? And so, yes, obviously SaaS, what you want to get to is long-term recurring revenue deals at a high gross margin. Now, in many areas of SaaS, you're seeing massive customer acquisition costs. You're doing this, you're burying a bunch of these other costs there. So at the end of the day, I think you need to, the costs within compute and the inference cost, or the training, compute for training and then inference, need to be factored into how you're looking at the overall kind of unit economics of businesses, right? But like, I just think that there's going to be a play where you need to actually have that engineering team that gets their hands dirty. And that's how we've built our model. Like, we are a venture studio that's an early stage investor in vertical applied AI, but we've got another side of the business that actually builds AI labs with large corporates and governments. And so we have that team that can go in and do that. And we think that's actually one of our biggest edges. We learn a ton from that, but like, I don't know, man, like, show me the examples of the great, of the businesses that don't have that component right now that are truly doing machine learning.
Yeah. Yeah, no, so I think that I'm firmly behind the way you look at the market. I think ML software, AI software is so dramatically different from traditional SaaS, where you cannot forego the services piece because services piece is integral to getting AI to function really well. and not hallucinate, and really have grounded results, be able to reliably hand off to a human and say, like, when should you trust AI, when should you not. A lot of that trust in AI is critical, and you need AI, especially in these like regulated industries, to perform really well. So for us, it's like we have to do the services piece to make AI really effective and capture value. It's a non-negotiable item, right?
Right.
How you do that, of course, matters, and you want to make it efficient. You want to make sure the gross margins are there. Of course, it's like running the business. You also want to make sure it's not a huge deterrent to scaling. If you do want to build a venture scale business, these are all problems to solve, but services is an essential component. It's not about like whether you do it or not. You have to do it, and then it's a question of like, okay, well, how do you go and do that well?
Yeah.
I think the other critical thing that I think that you're mentioning is that um, even the great SaaS companies like a Salesforce, especially if they're selling into enterprise, there's a huge implementation component. There's always been that, and people forget that because sometimes it's not the vendor itself that does it, but there's like a whole host of partners that have grown around, like Salesforce partners, and the services businesses, and they do the work. So Salesforce software never works out of the box. It's very clunky, very complex. And even though Salesforce has great business, great margins, it only happens, like the only reason they are able to do really well is because there's a whole bunch of services that either they do or their partners do. And I think
Right.
it's embracing that model, I think, is critical to getting ML to work
And,
well.
you'll see ML companies over time that have something similar to that, right? But we're just still in the early innings, right? And so, again, it's this is just, Andreessen Horowitz has written on this a bunch. The well-known VC, and there's others. I do feel, and this is tough to say all VCs, but I just feel that there's this immediate reaction that SaaS and AI, AI is just the new SaaS, but there's differences, and the most intelligent investors that I talk to understand these dynamics, and that the goal again is to get to long-term recurring revenues that are high quality in nature, right? And so you just need to model businesses differently. But if you apply it through that lens of just SaaS, then I'm not sure how you're going to play in the space.
Yeah, agreed. It's funny because like we look at it the same way. It's like really great gross margins, really sticky revenue, where you can also grow that book of business over time because you're just delivering so much value. And we do have a SaaS offering for the majority of our clients because we operate in regulated industries. We install on their VPC or they're on-prem, right? And the idea here is that our clients are actually paying for compute and storage, so that helps, of course, on the margin side. But most importantly, it's what they want, because they don't want data to leave their walls. So it's not SaaS, but does it deliver a lot of value to our clients? Yes. Is it long-term sticky revenue with good and great gross margins? Yes. So it fits all the things that matter from an investor perspective, even though it's quote unquote not SaaS, right?
Right.
Yeah.
And then, I mean, again, you and I have never talked before this interview here, but like not knowing anything about your business, I would imagine that in the long run, you have a huge opportunity to sell through the hyperscalers, whereas that opportunity did not exist beforehand, right? So if you go back 5 years ago, or even like the glory days of SaaS, right? Like you can take that, and if you have a good partnership with AWS or Azure or GCP, all of a sudden your ideal client in insurance, and you've immediately got your next 100 that you can hit up, and if you build that experience. And so it's really that partnership with the horizontal layers with the hyperscalers.
That's right. That's exactly right. It becomes an enabler, not competition.
Exactly.
So as you're thinking about building your business and growing that, how are you navigating some of the conversations with prospects around whether they should go to you to go and build what they need versus just building it in house, or in some cases maybe going to one of the big consulting firms that might be attached to, like a McKinsey, Bain, BCG, or the like?
Yeah, and we might be a little bit unique because we have a services business as part of our offering.
Mm-hmm.
And so we actually, we've worked, our most successful clients actually have their internal team. I actually would maybe push back on the nature of your question. I don't think it's built internally or outside. I think it's almost always hybrid. And so the more we've helped a partner build their internal data science team, the greater the book of business has it's always resulted in more business to this point. Like it's not like you solve your first few use cases in AI and then just be like, okay, we're done. All of a sudden, as soon as you do that, and it increases the data literacy, within the organization, it opens up all these other use cases, right? So our best clients are ones where they have strong internal data science teams, believe it or not. You still need a business champion that gets that there's a time you need to use some of that externally, but um, at least up, to date, that's worked for us.
Yeah. Yeah, I think that's right. It's playing well with the internal talent and filling the gaps where they exist, right? Especially if you sell it.
Here's the thing, man. Sorry to jump in. Like,
Yeah,
corporate innovation is hard.
yeah, sure.
So, and it sucks everywhere. I don't care if you're talking, like, we've done work in banking and insurance. We've done work in energy and clean tech, for a huge area for us. And then long run, I'm most excited about health. It every one of those industries you talk about has its issues. I've never had a traditional industry that's like, wow, they're so far ahead. They're also, I mean, even something like in finance that you think might be ahead, like
Yeah,
it's, and so I've never been able to convince an executive, hey, by the way, you should work with us as a scale up here because we can just do a better job. I can get better engineers. They actually want to build shit, right? They're not worried about this. And they can take risks because they're not tied into the bureaucracy of a large organization, right? So the executives that get that, it's just okay immediately, and then you close the deal in like under a month, right? Now I spend all my time trying to find executives with that right mindset because I've never been able to turn someone who is basically building an empire into believing that they should work with a partnership with a scale up. I've never
yeah,
been able to actually make that pitch, right? So
hmm yeah,
if listening, you've got executives that actually are like forward thinkers like that, I want to talk to you, right? But
yeah.
it's basically searching out that mindset.
Yeah, yeah, I agree. So, like with enterprise, they have teams of data scientists and ML engineers. It's not like they don't have that team. That team will do good work, but there's so many problems. It's so much. They have so many needs that a lot of them cannot be dealt successfully by the teams within. So they have specialized functions like innovation teams and other groups that are embedded into the org. They're trying to find the best vendors to go introduce into the mix through pilots and POCs, and they'll do their long cycle of activity. But ultimately, they want to go and innovate by bringing external talent and external solutions into the mix. And sometimes they do that through acquisition. Sometimes it's just a vendor relationship. Sometimes it might be a services company that they bring in to complement what they're doing internally, right? But innovation comes from within and externally. It's not one or the other. It really is the tandem.
Can I tell you a secret of like my long-term plan though?
Yes,
Like
please.
the industries that are the worst, like for us, we've had the worst experience in insurance. Um, like, but that industry will change more from AI than almost any other, right?
Mm-hmm.
One day I want to buy an insurance company and just be able to control that business and then build it from the ground up using the different tech stack, right?
Yeah.
So over the long run, I could see us being like a private equity fund where we actually go in and have that, and you do a roll up strategy where, because again, if you can't find the executive with that mindset, well, maybe we can just become that executive ourselves, right? Because
Sure.
insurance is a fabulous bit, and insurance is one of those areas that's sort of a special use case, but it's, I think it'll get interesting where you say, are you selling to enterprise? Or at some point, could you become efficient enough to become that enterprise?
Mm-hmm. Yep, absolutely. I agree. And sometimes you have to just innovate by kind of changing the game entirely. So stepping back a little bit, as an investor, given the increased commoditization of AI infrastructure and tooling, what do you believe are the most defensible competitive advantages that AI first companies will have moving forward? I mean, I think we talked about some of this, but is it proprietary data? Is it innovative applications being built that are very vertical focused?
So, yeah,
How much of the go to market matters? I mean, what components matter for this?
so I used to think it was going to be the algorithm. I don't think there's any moat or any defense to the algorithm, right? Like maybe you can have some patents that are somewhat defensive in nature, fine on overall business processes, but like I wasted a couple of years trying to figure that out. So I've not been able to find any algorithm that in itself is defensible. To me, it's two things, and I kind of touched on it before, but like it's data, data, data. Even when
Mhm.
using LMs, building an edge on data, having more data than anybody else to solve a specific problem. So, like, um, I I don't think that there's any way around that. And I think that it's going to continue to be the case. I mean, even the big foundational model companies are just trying to swallow up more data in different areas, right? And
Sure.
so that's where we go, okay, we can't beat them at that game per se, but there's still lots of markets that are a big enough size, right? Where if you have a deep understanding of that workflow, you have that. And it's tough to quantify this, right? But like, one of the projects we have is predicting wildfires, like where a wildfire will occur. You go, oh, for fighting wildfires? No, for wildfire pre-suppression. And you go, what's pre-suppression? Well, I don't know. Because I mean, if you understand in this business, it's like there's actually a ton of money that's spent on pre-suppression for wildfires, like basically like kind of like moving out heavy equipment to kind of create walls and so that fires don't happen, right?
Yeah.
So this is like one tiny piece of what is a massive, tens to hundreds of billions of dollars market, right? There's a workflow there. And so it's not like there's just some data set on the shelf in terms of working with that. We actually worked with our local government to actually get that and have a solution that is very
Sure.
accurate at predicting that and saves a ton of money, right? I'll give you another boring use case. Utility corridors, right? So like
Yeah.
utilities, like all those power lines, like we like to just plug things in and don't realize, we think about where the power is coming from, right? Like there's engineers that model out, is there vegetation overgrowth? Again, ties to wildfires a little bit, right? Is there issues of when do they need to do maintenance? Like you think about all the hundreds of thousands of miles of utility corridors, right? The way that they do that, they actually have guys going out, like manually looking for stuff, right? In terms of where you got to actually. So we think that we can actually use LiDAR data combined with maybe some satellite, but LiDAR data within and forms of Gen AI to actually model and build out these reporting structures that, number one, we think we can take 90% of the cost of doing these reports, right? But in a way, we can also keep people safer because you remember those big California wildfires like years ago, right? That all came because vegetation overgrowth, right?
Mm-hmm.
So again, those are like, and I could give you another 20 examples of these weird use cases you never heard of. That's kind of at this like adjacent, and wildfires and then utility corridors and this and that. So once you talk to the experts that have that workflow knowledge, having those people at the seat with the data scientists, you still can create soft moats, I'll call it, within that area. And then that still comes back to building a unique data set. So
Yeah.
workflow knowledge, data, and these things back and forth and back and forth. And then it's just execution, man. It's just fucking team, like just hustling and just doing it. It's just better teams. Like a small group of awesome people will always beat that big group of B players. Like it's always true, right? So
Yeah, and there might not be venture scale problems for some of the bigger players to pay enough attention to. But I think the other bit is that sometimes boring is good, boring is great, right? I think it's something that's overlooked because it sounds kind of boring and routine, but there's a lot of value that can be created by founders that are trying to go in, try to look for the most dazzling application of AI. I mean, these are really thorny, challenging, complex implementation and applications of AI. They just happen to be in a space that maybe you might not first think of as being an AI application. But once you get
that's
into
good
it,
because I want to go to the places where everybody from the valley isn't, right?
Right.
So
Agreed.
it's boring and does that. Yeah, you're right. Well, and it is not a political statement, but if you care about climate change, you will not solve the problems. You will not get to the Paris numbers or any of the other treaties unless you use software to optimize industrial processes. Now,
I completely agree.
I don't, whether you measure that in reduction of carbon, or usually reduction in carbon is from a reduction of an input, so you've made something more profitable. There's actually an alignment there, right? Like we have one project working on rigs in West Texas, like an oil rig, right? Where we're trying to build a tool that helps the operator know when they can turn off backup generators. I don't care, man, if you want to measure that in tens of thousands of gallons of diesel or carbon. Measure that however you want, right? It's good to be more efficient in that way, right? And so, and maybe that's not a venture scale business, but I tell you what, the 10 use cases on the rig, if you build a platform, that is.
Mm-hmm.
Right. And so again, it's like if you ban the word AI and just think we're using data to optimize or reinvent business processes. Okay, well, where's the end to that? Right? Like, I mean, you can start off with one use case and you start going on. That this power line example I said, that might in itself might not be venture scale. But if I show you the go to market and I show you what this founder has planned on it, the first prototype is this piece of it, and then it expands out here, and he's like, oh, and by the way, the TAM on this is actually hundreds of billions. So it actually is, right? It's
Sure.
just getting that toehold and actually building something that actually creates value, right?
Correct. Yeah, it's about value creation. Yeah, and if you kind of
Hard.
get that as part of the DNA of your company, you could do a lot of great things, especially as AI is still playing out. So, obviously, many VCs are grappling with how to value AI companies given the often lengthy timelines to productization and revenue generation. Even, what frameworks or methodologies do you find most effective when you're looking at valuing early stage AI companies? And how do you think about things like milestone setting and de-risking these investments over time?
Um, I mean, valuations are super tricky. The one thing I know is like we can't make any money off the Y Combinator valuations, right? Like, when you talk about like whether it's 20 or 25 or $30 million off a pitch deck, I can't make those numbers work, so I'll leave that to someone else. So the way we've solved this is we've almost said like, hey, that's really hard, so let's not deal with that. Let's get involved very early on. So we're actually on. So we're as a venture studio, we're actually on the cap table with founder shares. So we're completely aligned with the founders of the businesses, and so we'll be first money in, but we're also looking to be on the cap table in early days, right? And so in that sense, you're saying like, hey, if we can earn our seat at the table to be kind of in at a zero cost base, that's always best, right? Um, I think by over the last few years, we've been very intentional about having milestone settings. So, or by stage gating out, so we can, instead of writing say a $2 or $3 million check, you start off and you build that prototype, and it's only got like 150K to work with, and then you get into sort of pre-seed, it's only 500 to 750K, and then we'll do all that with a convertible note and sort of kick the can down the road for valuations. So as you're coming in through a convertible note or a safe on that pre-seed round, and you can just see what the averages are for valuation caps. But like, it allows you to get to that seed round where we bring in another party and we're able to actually look at that on a case by case basis, right? So I still think there's, it's still like you don't ever want to burn more than 20% of your equity in every round. And there's still like, when you look at modeling this out over the long run, I mean, like there's elements of that with the VC playbook that works. What we're trying to do with our portfolio though, is we're trying to say like, can we actually provide great returns without having to rely on the power laws of needing to have that 100 bagger, right? If we, for example, get rid of a few of the failures off day one, so if we have a few more singles and doubles versus strikeouts, right? When you model that in the portfolio, you can actually get a pretty damn good return. That's not to saying that we aren't going for swing for the fences every once in a while, but our whole business model is really about we can pay reasonable prices. But if our failure rate initially, if we can change that delta, then our business model works.
Yep, that makes sense. It's more measured, calculated investments, getting involved early on in possible, so you can go in and kind of have that big ride. But at the same time, it's harder to value in a pre-product, pre-revenue businesses, right? So they kind of play within the lines that you know best.
Yeah. Yeah,
Um,
and we
yeah,
get it. I mean, we get the same data sets that everybody else has at PitchBook and Crunchbook based, and like a bunch of law firms put this out, and so we'll look at those numbers. I feel there's just a massive disconnect between San Francisco or the Bay Area, then New York, and then the rest of North America. So to a certain extent, part of our business model is arbitraging. Like the valuations in Canada are way lower. If we can actually come in and have that piece of it, and then take companies to the US, there's an arbitrage that we have there just because where we're at. But I think the same is true if like you're sitting in the Midwest or you're in a bunch of markets that aren't, the Valley or New York, and I mean maybe Boston to a lesser extent, right? It just seems like I don't know, like things need to come back, but prices need to come back a little bit. But like to me, it just doesn't make sense paying the valuation of $30 million for an idea on a pitch deck. And
hmm
so again, I'm a builder who's an investor, so I like to think of it in terms of like, could I actually make money running this the old-fashioned way, like actually generating revenue? So, and again, maybe that's heresy to some VCs, but I don't know. Maybe that's the downside of being a builder instead of a purely than just a financial guy.
sure. Yeah, I think there's trade offs to both, right? I think you come at it with a different lens. But I suppose as a founder like myself, looking at investors and trying to build out a cap table, um, what is the real value that you're delivering
Mm.
to your investors? I mean, to your portfolio companies, your investments, beyond the capital, right? So how do you
Yeah.
continue to support and make sure that they get more value from having you on the cap table over time?
Yeah. I mean, and we don't have deep pockets, so it's far and away, if we can provide them that edge in machine learning, that edge in AI, right? That's really what we bring, right? People build with us because we've seen hundreds of AI use cases across a variety of industries in an entity, and so I think that where that manifests itself is we often staff some of our ventures, or like encourage team members can jump ship, and so we can provide that initial sort of team, both in terms of like from a planning, but also actually the people on the tools doing the
Mm.
work. And we actually encourage our team members to actually leave and go to our ventures, right? So that's something unique that you don't see with other firms.
Yeah.
More and more we're building reusable IP that we're giving sort of like wide open license to, think almost like a private open source. So
Mhm.
we're investing millions of dollars to actually use LLMs in vertical settings, right? There's a lot of like common building blocks there. So my pitch to them is like, if I can save you 6 months of your development roadmap, like that might change, the reason to actually
Yeah.
come build with
Hmm.
me, right? And then third, I think it's about just that speed of capital of saying like, we can, if we can save you, all that pain from going to friends, family, and fools for that initial sort of pre-seed round, let us be the friends and family round, right? And come in. You should be spending your time on product and talking to customers, right? Every second that you spend on something else hurts the business. So if you can give that AI edge, right, both from people and IP, and then we can save on time, I think we'll get the best founders building with us, and then over time you'll get that virtuous circle, and we can be that conduit to them getting to their Series A, right? So we really want to build a relationship with the right seed rounds and Series A to be able to actually. And at that point, then we probably are less active and we take a backseat. But in that first phase, we are very, very hands on.
That's great. Yeah, it's capital, it's talent that you bring in with your unique business model, and then it's also the software that you're building that you're introducing to help speed up the journey.
Yeah.
Right? I think those are deeply valuable, given how fast you need to move with scarce capital. Right, being capital efficient. So, um, these are amazing insights, Corey. Really appreciate the time today. We're right at the end of the hour. Where can people find more about you and AltaML? And we'll make sure to leave this in the show notes.
Yeah, I mean, just ping me on LinkedIn. I won't leave my phone number publicly here, but I'm not hard to find. I manage my LinkedIn myself, uh, and always happy to help out other entrepreneurs if I can share experiences. But as much as anything, I mean, always open to conversations for those in the space. I mean, I think this is the most exciting space over the next decade, and so for those that are building and looking for a technical partner, we'd love to talk to you. For those that looking for partnerships or looking for investment, those conversations obviously open as well. But yeah, don't hesitate to reach out on LinkedIn.
Incredible, Corey. I'm excited to kind of pick up the conversation in a year's time or so to see where things stand. And I think you'll have so much insights, both as a builder and as an investor. So, very much looking forward to that. Thanks for being on the show.
It's been a great conversation. Thanks a lot, man.
Yeah, appreciate it.